Good afternoon. I'm Sean Hennigan, Chief Investment Officer of Aurora Capital, giving you the July market update. Well, as has been the trend since the Liberation Day announcements, markets had another great month. The US implemented trade agreements with both Japan and European, which sort of gave the market some hope that these deals could be settled, although to be frank, there wasn't a lot of detail in them. But nonetheless, that sort of gave the market some confidence. In addition, the big beautiful bill came out with the markets getting very positive about the continuation of the tax cuts. But personally, I think there's some storing some trouble further down the track. But in the near term, it's given a bit of a sugar hit to the markets, and so we're off to the races again. So certainly while tariffs remain pretty high compared to they have historically, a bit of certainty has really helped the markets, and markets start nothing better than a bit of certainty. So as expected, the US economy rebounded in the second quarter after a pretty slow first quarter, basically all driven around trade. So a lot of trade was brought forward in the first quarter ahead of tariffs, and we expected a rebound. So the US economy grew by nearly 3% over that quarter, which was expected really, and so normalised over the 6-month period. Not so amazing, but still pretty positive. New Zealand still continued to struggle, and being hit with a 15% tariff on our exports to the US didn't help. So the New Zealand economy is still sort of facing some serious headwinds, but I think with ongoing interest rate cuts, the market should start to recover there. And we certainly saw that in the New Zealand equity market, which I'll talk about a little bit later on. Certainly interest rates were pretty stable over the period, with most central banks opting just to hold rather than raising rates. Just want to see a bit more time post the imposition of tariffs just to see the impact it has on it. I think the market's getting ahead of itself, continuing to see little evidence of inflation in the current numbers, so i.e. tariffs aren't flowing through as people were expecting, but I just think it's way too early to talk about this. I think the impact of the tariffs is going to be later this year, early next year, and so I think markets have been a little bit sanguine in terms about the impact. In terms of equity markets, I think global equity markets in New Zealand dollar terms are up close to 4%, which is another huge month. And this has again been driven by the Magnificent Sevens back in vogue, with these stocks all related to anything to do with AI. Just seems to be going from strength to strength. Again, this creates real concerns for us. We don't like highly concentrated markets, and the markets now as concentrated as they've been since 1999. And in this case, it's all around one theme, and that's AI. So it just does make us nervous. Markets are certainly priced to perfection. If anything happens, which is a little bit disappointed, there's not a lot of valuation support there. I think we need to be very cautious with this exposure. In terms of the currency, with the Federal Reserve being on hold, that gave a bit of support to the US dollar. So the US dollar actually, against trend for the last 6 months, actually was pretty positive. And I think the New Zealand dollar fell about 2.7%. So any unhedged global equities did even better than the hedged version of that. So the outlook, as I said, we remain pretty concerned about the concentration and the valuation of global markets. So we remain slightly underweight global equities, preferring to be a little bit overweight New Zealand equities and global infrastructure, where we just think there's a bit more relative value and a bit more downside protection. So we continue to be defensive, but while markets are running, we're still very happy with the returns that we're getting. So with that, I'll wrap up. I hope you've enjoyed the session. Any questions, please reach out to your financial advisor. I'm sure if they can't answer them, they'll reach out to me and we should be able to provide an answer. Thank you for your time.